Okay, guys, we've walked through a little bit of the basics of what a bookkeeper does, some of the things that they deal with, some of the financial statements that they look at, and now it's time to come back and talk about what our options are. If you're still interested in doing a bookkeeping business, you kind of have two options to get started. You you can be a business owner, which is you open your own firm and you go get your own clients, or you can go and you can be an employee of somebody else. I have a preference for that, and it's probably pretty obvious. And because you're taking this class, you probably do too. But I do think that it's important to cover some of these items just so that you're aware of what you're jumping into. So let's just take a look at some of the different things. So the first thing is training. So, as an employee, typically you're going to get training in whatever that job is. If you get hired for a job, included in that is probably somebody that they assign you to, or they give you a list of tasks and a source to go and look and how to do training. So, it is important to note that, the pro of being an employee in somebody else's firm is that you're going to get that training. It's going to be provided to you, or it should be provided to you. But in a situation where you're the business owner, the training that you get is the training that you find and you take for yourself. There is no formal training that is required for a bookkeeper, but it's obvious you're going to have at least a little bit of training to figure out how to perform the job function. So it's just important to mention that when you're thinking about this, I want to make sure that you're not sitting down and thinking that you're going to have a full 8 hours a day, 40 hours a week, that you're just making money. There is going to be some training involved in doing what you're doing and some continued education. I do spend a lot of time, especially when COVID hit and we had all of these new programs going out. I did spend a lot of time attending online courses, going out and reading things off of IRS.gov to figure out, what the new requirements are. I am on some email and some forum groups that I get daily digests that I go through to try to make sure that I keep up to speed on my education. And, sometimes I actually go to conferences so that I can, learn some best practices or learn from my fellow colleagues or, tech stack. That's something that I spend a lot of time on where I'm out there and I'm looking to see what technology is going to work to help me do my business better. And all of that I'm kind of putting under this training umbrella. That's something that just be aware that you will need to spend a little bit of time doing that. The other thing that you probably are not going to be responsible for if you're an employee is marketing or administrative tasks. Normally, as a bookkeeper in another firm, you will have administrative tasks related to, getting information to and from your clients. But in terms of administrative tasks for like, you probably won't be responsible for, doing the billing and collections for that client or arranging people's schedules around vacation time or doing the marketing. You probably aren't sitting there and having to figure out, should I run a Facebook ad, should I do an email thing. You don't have to make those decisions as an employee, and as a business owner you do, and I will tell you that I agonize over those. I feel like that is the one part of owning my own business that I don't particularly enjoy. um, but it is a necessary part, and so I just want to make sure that people are aware. I'm not trying to talk you out of it. I think the benefits far outweigh the pain that there is with having to do your own marketing and administration, but I do want to make sure that that's something that you're thinking about. The one pro, and I feel like one of the big pros in owning your own business, is you have complete autonomy for how you do things. You have complete autonomy for what that schedule looks like. You can determine when you're too busy and whether you need to hire somebody. You can determine what services you offer. You can determine what clients you serve. So I feel like this is a huge plus. I spent a lot of my career, I graduated with my undergrad in 2004. So, goodness, I've been doing this for almost 20 years now. And my very first company I worked for was IBM Business Consulting Services, which they did outsourced accounting. And while I love that, and I think that it was a great job to help me kind of learn some of the fundamentals of how this kind of stuff works, I didn't have really any say for how we were doing it. Somebody handed me, a spreadsheet and a system and said, this is the process. And as you start growing in your career, you will have in an employee situation the ability to kind of forge your own way with certain things. But in terms of the direction that the company is going or the types of clients that you're taking on, or in some cases, and this was a big thing for me, I didn't get to decide when that client wasn't a good fit for how we did business. So, in many times, I was put in a position where I was being asked to meet what I felt like in some cases were very difficult or impossible, concerns from a client where I felt like there was just a mismatch between what they thought they were receiving and what we provided. But I didn't have the ability to say, "Hey, I don't think this is working. Let's break up and stay friends," right? But in my business, I can do that. I can look at this, I can have discussions, I can make decisions about that and about who I'm hiring. And maybe, maybe the problem is on my side where I need to restructure some things to make them work a little bit better. In my company, I have full autonomy to do that at any point. I get to determine the timing, all of that. So that's great. The workload. So the workload is what you make it. But I will say that being a business owner, because you have this marketing administration and you've got this autonomy stuff that is a huge benefit, and this training, all of that's on your plate. The workload has a tendency to be a little bit more. You're going to be spending a little bit more time running your business than you are just doing other people's books. So in an employee situation, right, I walked into work, I already had the business. I already knew what I was supposed to do, and I just sat down, I did it, and then I could clock out and be completely free of that until the next day. So just want everybody to know that the workload, it's a little bit different, but again, because you have that autonomy, you can adjust that as needed to suit your lifestyle, whatever it is. If you need Wednesdays off because that's when you volunteer, at the local library or at the school, you can do that. But just be aware that that workload the nature of it is a little bit different between a business owner and an employee. So just want to make sure I'm mentioning that. Also, legal and regulatory. If you're an employee, you're typically not having to worry about whether the company is, if they have payroll, that they're paying their payroll taxes, right? That you're not having to make sure that they have an active business license to practice. You're not having to make sure that they have professional liability insurance. And then there's just a lot of things like one of the things that I have to do is maintain you know, labor posters and put those up. Those kind of things don't really come up to the person who's working there, but I'm responsible for making sure I have enough money to meet payroll, that I have enough money to pay my debts, and that I'm filing my taxes on a regular basis, right? A business who does other people's taxes or does other people's bookkeepers also are taking care of their own. So it's important to note that that's on there as well. Financial risk. As an employee, your only risk is them telling you, hey, your hours are cut or we don't need you anymore. Whereas the financial risk as a business owner, this is your business. You might hire somebody and now you're kind of responsible for making sure that you can meet the obligations with that. Again, I think the autonomy um, is well worth this, especially if you kind of have an entrepreneurial spirit. I think it's great, but there is some financial risk there in that if you can't go out and get clients or you have clients that you can't perform services and they decide that they don't want to work with you anymore, there's some financial risk there. So just wanted to make sure that that's mentioned. However, the income potential, especially with a bookkeeping business, I think makes up for that. I'm going to, in further lessons, kind of talk you through how you can mitigate that financial risk by setting up your engagements and your pricing in such a way that your income potential, that you can scale this and end up having multiple clients. So if you end up losing just one, it's not a catastrophe. And there's ways that you can maximize that income potential by choosing the clients that you're working with, right? To choose the appropriate pricing, to manage your scope and your labor or your software, your tech stack expenses. So there's a huge amount of potential to really, the sky is the limit with this, and I think it's important to mention that, and that with the flexibility it's just huge, and I really think that it's worth doing that. At least for me, it was. So let's assume that I've convinced you that the autonomy, the income potential, the flexibility is absolutely worth it. Let's talk about, so now you do want to start your own business. How do you go about doing that? I do want to show that there are different types of ways that you can structure your business, and this is really there is no right way. I'm going to try to cover some of the pros and cons, but this is just, I just want you to be able to think about this so that you kind of have an idea of what might work in your situation. I will tell you, I'll tell you actually later after I run through some of these. So the first one is a sole proprietorship. As I mentioned here, it's super easy to set up. You literally don't even have to go get a business license if you don't want to. You can just operate like you're a gig worker where you just take money and you just make sure you keep track of that. And at the end of the year, you would just, like it says here in taxation, you would just report all of these revenues and the associated expenses on a Schedule C on your personal return. There is no separate business return. So all of it is just basically you going out, and it's a really large adult lemonade stand, right? You just go out and say, "Hey, I have a service that I am offering. Would you like to buy it?" So very, very simple. It's great for small scale individual bookkeepers. I think that I was a sole proprietorship probably for the first 5 or 6 months after I decided to get started, just because that was the part where I was dipping my toes into the water to see, is this something that I want to do long term, right? I didn't want to go out there and get business licenses and create all of this work for me if I ended up not getting clients or enough clients to support the business. So I think that this is a great choice for when you're just starting out. And it's really good for when you're getting started. So a partnership. This is actually how my business is currently set up. Um, but there are different types of partnerships. You can have just a general partnership. There's a limited partnership, a limited liability partnership. This is typically when you go in with somebody else. So maybe you have a friend who also wants to do bookkeeping and you guys want to join a business together. Or maybe you have another person who would like to invest in your business, who maybe they want you to be the managing partner in that you run the business, you're there for the day to day operations, but maybe they are giving you a loan to get some of this started. So, partnership, mine is set up like this because I listed my husband as a partner in my business. I have him listed as a 50% owner. And the only reason that I did that is, number one, I wanted to have a limited liability partnership so that there is some legal protection for me in an LLC. But with a partnership, I did that so that if I get hit by a bus, my husband, since he is a 50% owner of this company, will have no issues going to the bank with that paperwork showing that he is a 50% owner and being able to sign checks or doing whatever he needs to do without worrying that that we have to get lawyers involved or get powers of attorney and things like that. So mine is actually set up as a partnership. There are some other options. There are corporations. So a C corp is typically what you would consider, like, you see these a lot. Anybody who's like publicly traded is going to be a C corp, and this is normally where you will have multiple shareholders. I see this a lot. Um, but also, some people like to use the structure because C corps are taxed separately from the owners. So if your company really takes off and it's made a lot of money, but you're not taking any cash out of the business, um, then you personally don't pay any taxes on that. The corporation would pay taxes on the income that it made. Um, but you would not pay any taxes on this. The downside to that is that means you can't remove money without it being considered a dividend. An S corp is one of these hybrid things where the IRS recognized that there might be people who don't need like all of the structure of a corporation, but they liked the ability, to pass through, which means that the income on a S corp ends up coming out through a K1, and you do pay taxes personally on anything that makes, but it does provide some protections and also some tax benefits that help somebody who's maybe a smaller business or only has one or two shareholders. So, another thing that I did mention here is sometimes it's easier to sell a C corp or an S corp, especially if the sale is structured in something that's not an asset purchase. Because with a C corp or an S corp, all you have to do is sell your shares, and you don't have to like try to get yourself unsnarled from the ownership of the company because you're just a shareholder, and whoever you sell that stock to becomes the owner of the company. And then finally, the last one that I wanted to mention is just a limited liability company. And I'm kind of mixing filing status, which is what an S Corp is. S Corp is not a business entity type. So when you go to your state, whatever state you maybe decide to set up a business and go ahead and apply for that business license, you're probably not going to see S Corp as a type that's on there. You're just going to see LLC, partnership, or a C Corp on there because S Corp is a tax filing choice. So it's for more tax treatment than it is for anything else. But a limited liability company um, can be choose to be taxed as a sole proprietor, right? So you can set up a sole proprietorship, and if you're the only owner, you can still report that on your Schedule C, just like over in this example on the sole proprietorship. Um, but you can also, if you have more than one person, be a partnership, or if you want to set up as an S corp, you can do that as well. Um, you can have different management situations in this, but also just the LLC. I do recommend at the point when you are making some sort of consistent income, and depending upon what your filing fees are in your state, I'm in Tulsa, Oklahoma, and I believe that my initial filing fee was either 25 or $50, and then I pay $25 a year to keep that business license active. Um, so it's not hugely expensive, and I do like the LLC does give you some legal liability so that, let's say, hopefully this never happens, but you have a client who decides they want to sue you and for some reason maybe manages to win that case. An LLC will protect your personal assets because it creates a separate business entity so that the only thing that those people can go after is going to be the business owned stuff and not your personal stuff. So while a sole proprietorship is great to start out when you really don't have any money coming in, I do recommend that as quick as you can to at least switch over to an LLC. And then you might talk with a tax pro about whether these are a good option for you. But this is kind of the options. I hope that I've convinced you that a bookkeeping business is a good idea. I promise we will get into the nuts and bolts about how to get that started. But I did want to cover all of this just so that it's on your mind, that it doesn't fall off of the table because you end up getting too busy worrying about other people's books. I do want to make sure that you know what your options are here. Um, and at the very, very end of this course, I will show you how you're going to have some options to maybe reach out to me with some specific questions that maybe we can talk about what your particular situation is and decide what works best for you. But until then, I hope I convinced you that having your own bookkeeping business is a great choice, and then gave you something to gnaw on for a little bit about how maybe you would want to structure that depending upon what your personal situation is. Until next time, thank you.